Today on the Income Flip podcast, I have Laura Rehbein joining us all the way from lovely Tampa, Florida, to talk to us a little bit about how we should be thinking about money at the different stages that we go through as real estate entrepreneurs, as business owners. So Laura, welcome to the Income Flip podcast.
Thank you. Glad to be here.
So we were talking earlier a little bit that you're originally from Michigan and you found yourself in sunny Florida. And I'm like, of course, that makes sense, right? Of course.
Complete sense.
How did you get into the wonderful world of finance and investments? Curious.
Very interesting story. I was in my first job out of college living in Naples, Florida, which is, as many people know, is a very small town. And what I was doing was not my calling in life. And at that point in time, 30 years ago, I was trying to figure out what am I going to do? And there are no major corporations in the Naples, Florida area. But at that time, people like me would put ads in the Sunday newspaper to do some seminar. Come listen to me and do my seminar. And they were all middle-aged white men. And so I realized that there was a niche for women in my industry. So I sought out a company that would hire me and teach me and show me the way. And 30 years later, here I am with my own independent practice.
Same company?
Same company. Mm-hmm.
Wow. That's
Same
awesome.
company. Mm-hmm.
Okay.
Yes.
And that is Ameriprise? Is that correct?
Ameriprise Financial. My franchise is called Impavid Wealth Advisors. And most people have never heard the word Impavid. It's actually a little known adjective in the English language, which means fearless.
Love it.
So there you go.
And you just wrote a book. Right?
I just wrote a book called Fearless Finance. Go figure. And all dovetails together.
Well, that tells me that in your, one of the anchor words in your life is fearless. Mm-hmm. So let's start there, right? Mm-hmm. Where did that come from?
It comes from, there's a long branding process that I had in terms of what I wanted the franchise name to be. And there's some, I wanted it to have a meaning. I wanted it to be something somebody could say repeatedly on the phone every time they answered, multiple times a day. But when clients work with us, I wanted clients to become more fearless about their financial situation than they were without us. Mm-hmm. And so to me, being fearless isn't mean taking a whole bunch of risk that's unnecessary. It's about having clarity about what risk you're taking, how it needs to work for you, and where your path is headed, so to speak. And is that the path that's going to give you what you want out of life on a financial level? Mm-hmm. So Impavid.
Well, let's go back in time because you've been in the business 30 years, and I know that it's not an easy business, right? It's not an easy business, right? There's a lot of marketing of yourself. There's a lot of competition. It's a hard business. How did you, because I think this is very applicable to anybody listening right now that might be building their thing, right? How did you go about building your thing, right? Did you niche it down? Were you focused on women? Did that come, would that come later? Is that even a niche now? I'd love to understand your journey of all of that.
It is a hard business to be in. And I'm not sure I would wish this on a new person today, although it still is a very good business to be in. The niche that I've always had is not gender-based or age-based. It's more of financial planning-based. Mm-hmm. And so when you look at individuals in my industry, there's many different types of people. But I come from what are you doing? Why are you doing what are you doing? If you're going to build a house, are you going to buy a bunch of bricks and cement and drywall and just slap it together? Won't you have an architectural plan? Mm-hmm. Why don't you have that for your life? Mm. Why are you just out there buying things? Oh, my neighbor told me about this hot stock. My buddy's investing in this. I think I'm going to go buy that house down there. Why? What's the plan? What's the plan, people? Got to have a plan. And so that really is my niche. So people that come to me that say, I have this stuff. I have this rental property. I have this house. I have this investment portfolio. I don't know if I have enough. Can I retire? Am I going to be broke? Am I going to be eating cat food? Like, what? Am I okay? Like, it's the plan. And that really is our niche.
Yeah.
People come to me all the time and they've built wealth over generations in, many different types of forms. And they're still coming to me going, I have children to educate. I have parents to take care of. I'm worried about having enough money. Do I have enough? What about the tax man? How do I get, how do I do this? And so that's our niche here, is truly the financial planning. I mean, I do all the investments, I do all the other stuff, but it's the plan.
It's interesting because I was for many years that no thesis guy just buying things, right? Like, oh, you buy a townhouse here, a single family house there, like invest a little bit in this stock, and eventually you're like, okay, what's my thesis here, right? Like, what's the plan? What's the plan? I was tasting different types of investments to understand what fit for me, what I enjoyed, what my natural gifts brought. And I'm an active investor, right? So I'm an active investor.
Sure.
But I realized that I'd spent a long time without a good architect, like coming up with a good plan. And so you're investing entrepreneurially and not on purpose. And so you need to be a purposeful investor. And it sounds like you're the person that gets those people in the room, right? And so it's like, let's build something with purpose.
You need to be a purposeful entrepreneur.
100%. Yeah. And so when somebody, you and I were talking before we jumped on here, you said one of the areas that people have to be very cautious of is this: when they're actively investing and there's a phase of accumulation phase in their life, but then there's a phase that they enter into that is more of asset protection, or will this last me long enough, right? And that people make mistakes at that juncture, at that moment in time, right? Can we deep dive on that a little bit?
Absolutely. People come to me in many stages in life, but a lot of times people come to me and they're in the accumulation stage where your focus is all about growing money. And it doesn't matter what assets you're using. Substitute anything in here: stocks, real estate, businesses. Your whole focus is, let's take risk, let's grow money, grow. The problem is when you flip that switch and you say, I want to retire now. The focus is different. It's about using your money in a smart and steady way. Risk changes. So I always tell clients, what gets you here won't get you through. Because the risk changes and the things you have to be concerned about, it's a different perspective, shall we say. Okay. So considering where you're coming from, I look at it and think, okay, if you're building a big real estate portfolio, great. When you transition to say, I want to retire now, I don't want to do this, how are you going to recreate your paycheck? How are you going to get money out? How are you going to manage that real estate portfolio? You have to also look at knowing your number. And I say that because sometimes if I say, Rob, how much money do you need a month to pay all your bills, to be secure in your lifestyle, and to be in control of your retirement? And how much money do you need set aside after taxes? At what growth rate will that give you to give you control, security, and cash flow in retirement? Most people come to me and go, I don't know, that's why I'm here. I don't have that plan. I don't know, and that's why I'm worried. I've got all of this stuff I've accumulated, and I don't know how to transition it to now be about smart, steady money coming in so I can go off and enjoy life and not be as focused on the accumulation as I used to be. Does that make sense?
Absolutely. What is the number one mistake you find that people are making during that period?
Number one mistake? I don't know. I think there's several mistakes that people can
Okay.
make. Um, One of the mistakes, especially when you have somebody who is very savvy, they've maybe been a real estate investor, maybe they've been running a business. When they flip the,
I would imagine, Laura, just to interject real fast, they are know-it-alls. They think they know it
well,
all.
not
Okay.
necessarily,
Okay.
but if you are in real estate or if you're running a business, many times those individuals are used to chasing returns, building the business, building the next big thing in your business, buying the next big deal in real estate, right? So the whole adrenaline
Yeah.
of building, growing, I'm taking risk, they don't necessarily stop doing that. And so
Mhm.
that can be flipped over into they continue that risk pattern in retirement when they should be more focused on controlling taxes, creating that income, creating that stable thing so they can be in retirement and not have to be concerned.
It sounds like a form of therapy when you say it, only because I'm thinking of some of the entrepreneurs. Like, I'm very close to my original mentor. He's worth like, you know, $500 million, and he sold his financial services practice for hundreds of millions of dollars, and only to just step right back in. And he's like, I think I can make another 50 million before I pass. Like, he's just like, he loves the art of the deal and selling, right? And I'm almost like, I almost think if you took that away from him, he could die.
And there's nothing wrong with that. There's nothing wrong with that. But what I would say is that if that's your personality, and I'm a very high type A, run circles around people, there's nothing wrong with that. And I will always defend that. However, when you get to that point in life, if you sell your business or you sell your real estate for billions of dollars, or even let's back it down, millions, let's take out the B, right? Millions of dollars. At that stage, perhaps you need to stop, and I talk about in my book, the bucket strategy, and say, I've just sold my business or real, whatever the case might be, for millions. How do I now segment my financial world so I have short term money to cover everything I need? And it doesn't matter if my business deals go south, my real estate drop, it doesn't matter. I've got safe, secure stuff that's going to cover me through. I have middle of the road stuff that's my backup that has medium sized growth that can backfill my cash when I spend it. And then I have my growth stuff. And you keep the new business venture, because that gives you the adrenaline, in the growth bucket. But you have that shorter term bucket so that way you know your needs are met. Because I will tell you, when you are 65, when you're 55, when you're 75, it's not the same body as when you were 25. So even though we might be addicted to adrenaline and just be so used to building the business and growing everything, there might come a time where your body says, hold on, I'm not doing this right now. So do you have the structure so that way your income can continue if you can't keep working your business or building your real estate? And that's where sometimes people ignore that.
They're just they haven't. Yeah, I think sometimes people haven't had the good fortune of maybe meeting somebody like you or reading a book like yours to give them pause to think about that. I think about this one client that I'm working with, very nice lady. It's kind of a sad story, but I could see the story happening to so many people. She worked her whole life. She's kind of near retirement age. She decides to invest with her grown children in a franchise, a franchise. It sucks all of her cash and money. They are now can't they had to shut the business down. It sucked all of her cash. She's now taking care of all the kids. her husband is older and sick, and she's driving Uber, and she's just stuck in just an impossible situation, you know?
So in a situation like that, if that woman had come to me, I would have sat down and said, okay, let's think this through. How much money do you need set aside in investments, in whatever makes sense for you? That way your retirement is taken care of. Set that aside. How much money do you need to give to your kids to invest in this business? That needs to be above and beyond your retirement nest egg. And if you, and let's run the numbers and put the math to it. So it's black and white, and there's math, and there's no vagueness about it. If you don't have the money to gamble on this franchise, you don't have the money. Period. Because the last thing I want you to be doing is driving for Uber at 80. I don't know anybody that's going to want to ride in your Uber at 80. Right? But that's where people don't look at the math. Can I afford to take this amount of my assets and gamble it on this risky venture? Because the risky venture, it could have gone the other way. It could have taken off.
Yeah.
But you also
Yeah.
have to realize it could not take off. So have you set aside what you need for retirement? And people come to me all the time in situations similar to that, or in situations where they don't know the math. You have to figure out the math. There's a thing in my book, I talk about bad math. And everyone's like, bad math. My significant other hates it when I say that. He's like, why do you say that? That drives me crazy. Like, bad math. It's not that people can't do math. It's but you take successful business people, successful people that have invested in stocks, real estate, whatever, they can do math. What happens is they don't have the tools to do the projections to figure out how much money do they need saved up to give them the income stream securely after taxes with inflation. It's not that they can't do math, they just don't have the right tool.
How has inflation played into the whole equation for projections?
People, what I find is people tend to underestimate taxes over their lifetime. They tend to underestimate inflation. And so those are the two of the wild cards. So when I do planning for people, I usually overestimate, because you're never going to be mad at me if at the end of your lifespan, woo, you have too much money. But you're going to be upset if you're driving Uber. So to be conservative, you need to overestimate taxes, overestimate inflation. But if you talk about income and retirement, you also have to think about taxes. Because where's your income going to come from? Is it only coming from rental real estate? At some point in time, will you need to sell a property to create money that you can spend because the income's not enough anymore because of taxes and inflation and your lifestyle? How will you handle taxes? A lot of times for my wealthy families, they forget to plan for required distributions. They forget to plan their income in terms of where do I pull money from so I can balance my tax bracket, right? Because if all of your money is coming from taxable sources, you don't have much tax control. So those are the things that can catch up to people that are just used to the, what do I want to say, adrenaline of the chase of building, the next greatest business or the next whatever. They forget to look at the taxes and the inflation and how to structure when they want to retire.
Your book, when you sat down and decided to write it, because I know that that's like a work in progress to write a book. Right? I know. It's a work in progress to write the book. What was the core message that you wanted to get across?
the core message is the things that I see people that they need to go back and look at different stages in life, they're all the same concepts. It doesn't matter if you have $5,000 or if you have 50 million. As you build wealth over your decades in life, right, you still need to go back and touch base on what's your number, like how much are you going to need? What about taxes? What about inflation? All the things that I said. You need to go back throughout your lifetime because as you build your wealth, things become more complex. Think about it. If you're first starting out, got a little bit of money, maybe you buy your first house, maybe you're just out of college, have for your first job, whatever, your math is probably really easy. Fast forward, you're in your 40s or 50s, you've had multiple jobs, multiple 401ks, maybe you have a couple properties, you got a couple kids, you're now paying for college. Your parents might need help if they're not financially stable. Oh, you have to retire too. Do you have enough life insurance on yourself for your spouse? What about long-term care for your parents? How are you paying for college? What about those old 401ks? So it just becomes more complicated, but you go back to the same concepts. You're just revisiting them with your more complicated life today. And so I wanted to write a book that was straightforward language, that if you have 5 million or 50 million, it's the same thing as if you have less than that. You have to go back and look. And I've had people walk in the door that are very wealthy people and they read and they're like, oh, I didn't think about that. If you did, you'd do what I do for a living, right? I mean,
That's right. That's right. That's why you're there, right? That's
Yeah.
why you're there. I mean, I think you are there to help people look around the corner, right? And because you've also you see so many different situations over a 30-year career. You can see patterns. You can see the way to do it right, the way to do it wrong. Hey, there's a cliff over there you're not thinking about, right? And so everybody needs, I use a metaphor like we're all climbing this mountain as entrepreneurs, right? Like everybody needs a Sherpa, everybody needs a guide to successfully get up the mountain, and you are that Sherpa around money.
My example I always give to people is think about all of your favorite athletes, really successful ones. Don't they all have coaches? Most successful CEOs I know, they have coaches. Where's your financial coach? And so when people are in the accumulation phase and start to transition into the distribution stage or the retirement stage, there's also things that I talk about in my book and just in general with clients that people don't always think about. When you're thinking about your finances, a lot of people think about, I need to do an estate plan. I need to do my will, my trust, my, whatever. I will always say, especially for my single clients, because a lot of people find themselves solo in retirement for various reasons. What happens if you've built your real estate portfolio, your investment portfolio, your business, whatever? What happens if you're still here but you're not competent? Who takes the wheel? And I've seen great scenarios where there is a plan, and I've seen bad scenarios where, the spouse of the deceased business owner, might be sitting in there trying to figure out, what do I do in this business? This wasn't my, like, what am I doing? You can add that to any example you can think of. What if you're still here and you can't manage it? Then what?
Yeah, it's those things that we don't. There's a couple of things that you've said that resonate with something I talk to my team about all the time, right? And this is very basic, but it's when we're investing, you're always hoping for the upside, but you're always protecting the downside.
Correct.
What happens if? What happens if? I just had a friend of mine pass away from a stupid golf carting accident, right? And it was just on a golf cart, just a dumb accident. And it's the ripple effects. Nobody expects that to happen, but are you properly insured? Do you have all these things in place? And we don't want to think about them because we just don't want to. And yet we need to hope for the best, but always prepare for that moment of what happens if, right?
Yes, and you need to do that with your money. What if we go into retirement the same year the market takes a big dive? Sequence of returns has a very big impact on your retirement. If you retire in a year that the market is wildly down and you didn't plan for the short term cash assets to get you through in the medium term and the long term, and you're actively having to liquidate things because you didn't come to me for advice, you're selling a lot more. So you will end up spending down your assets a lot quicker. So you have to look at what is your risk on the money side? What is your risk kind of on the life side, what you just said? What if something happens to you? What if you become incapacitated? What if you're not here? How are things going to pass on? Those types of things. So I'm the one that kind of brings up all of the things that maybe you haven't thought about that you just need to be aware of so you can determine how you want to manage that risk. Leave it out there and just be aware of it? Or is there some action that you can take to handle it?
How do you work with? I would imagine you said there's a lot of people that approach retirement and they find themselves single for various reasons, right? We've got a big divorce rate in the U.S. But what about couples that might not be on the same page with money, right? I've seen that happen where one is risk averse and one is, not. And are you bringing everybody to like as an example, my wife and I have a monthly money date, and we talk about, okay, what was the goal this month? How did we do in relation to that goal? What does our net worth tracker look like? Do you know where all the bodies are? Right? Like we want to make sure that each person knows what's happening with the business and the money and the assets at all times. And I think that came out of because when my wife's dad passed, he controlled everything, right, you know what I'm going. And
I
mom,
know exactly where you're going.
he didn't know where anything was. Right. Luckily, her brother was a financial planner, and like he had access to stuff, but it could have been really, really messy.
Oh, yeah. Sometimes people are on different pages risk wise. And so the beauty of working with a financial advisor and somebody that does planning like myself that you're comfortable with, when we look at the numbers, and I'm totally making this stuff up, hypothetical, let's just pretend you need, for round numbers, $10,000 a month today. And if we have one spouse super aggressive, one spouse super conservative, you can look at their money as a composite, how is it diversified, and you still say, well, maybe we need 300,000 in very short-term assets to get you through, and then X amount in medium, and then the growth. And then the aggressive person can look at the growth aspect. Sometimes if they're super aggressive, maybe they just have like I'm going to Vegas account
Yeah, you got a little slush fund for them to like.
and if they
Yeah.
lose it all, that's fine. It's taken out of the picture.
Yes.
But also what is very helpful, because sometimes when people transition into retirement, they don't always have a good feeling for their number. And so if they say, sure, I need 10,000 a month, but then all of a sudden 10,000 is turned into one spouse is spending 30,000. By relooking at those numbers, we can rework the plan so that way both spouses get their needs met because the plan still has to work. If you're super aggressive, the plan still has to work. And you need to be aware of the pitfalls. So maybe you need a I'm going to Vegas account. Okay. The rest of the money has to be working so that way in retirement you can have control, security, and the freedom to know you're not going to be broke at 80 driving an Uber because you've made the plans, but you still have your going to Vegas account.
Yeah.
One of
Yeah,
my soapbox items, and I will take this opportunity to get on my soapbox. See, I have it here on my desk. When I talk about estate planning, how many people do you know of that have pets? They love their dogs, they love their cats, they love their pet pig or iguana or whatever, right? A lot of people. For my clients that work with me, when they do their estate plan, I direct them, and I will get permission to talk to their attorney. Draft a pet trust into your documents. It doesn't cost you any more than if you didn't. It allocates money from your estate set aside to take care of a pet, any pet that you happen to have when you pass. And whoever's in charge of your estate can decide who's going to take care of the pet, and there's money to take care of the pet's needs till the pet passes. If you don't do that, the odds are your pet is going to be dumped at a shelter, and they probably will not make it out. I'm very big in the pet rescue, so that's my soapbox.
Oh my
And
God,
you do the
that's
pet trust,
amazing.
and you got it covered.
Yeah, a couple of things. We just rescued, this awesome boy. We call him Remus, right? We just rescued him, and we're in the process of finalizing our trust. And nobody talked to me about taking care of the dog, which we love. We have like my daughter has like she's Dr. Doolittle, so like if something happened to us, she would take like all the animals, right?
But you think. I hear that all the time. My child will take. However, or my friend. You don't know who your daughter might marry in life. What if the person she marries is highly allergic?
Oh, well,
What if your
I already know
daughter's
she
living
won't marry.
somewhere where they can't take the pets? You just never know.
You're right. You're right. If you want to be 100% confident, yeah.
So that's my soapbox. I make all of my clients put a pet trust in their estate documents because
think
I
that's
see all
great.
the animals getting dumped.
I love that. I love that.
The
So
two,
do
the
you,
two that are not under my desk at the moment, they're in the other room, are both rescues that both got dumped.
yeah, it's so funny. We just adopted. I don't know what breed he is. He's a mutt, but he's amazing, and he's such a good boy. And the other dog we have is pure breed Australian Shepherd, and we were worried that they wouldn't get along. And he's such a good boy, and we're like, who would have dumped this dog right at this shelter? Like he is like amazing, just amazing, like lovey, nice, kind. Not no behavioral problems.
It happens every day. One
Yeah.
of my dogs, Levi, is a Chihuahua mix. I wish I had him in here. I'd show him to you. But oh, he's right behind. You can't see the picture. But he's a Chihuahua mix, and he literally looks like a teacup husky. He's 5 pounds. He looks like a husky because he's got Pomeranian in him, so his ears
Oh,
are
that's
all
funny.
pointed and poofy hair, and he's got some Japanese chin, so he's black and white. He was one of 4 dogs that a bedbound female, had. And when she passed, none of the family members could keep these 4 dogs, and they ended up going to a rescue. They had to go to the local humane society and then went out to the local rescue. All 4 dogs got dumped.
Yeah, it's wild, wild. I remember last story about dogs, but like I'm in the so
See, I've totally sidetracked you.
25 years ago, we had a dachshund, and this might have been like 30 years ago. We had this dachshund, staying in this girl, and she had a dachshund, and we're like, oh, the dachshund needs, like a friend. So we go to the local shelter, and there's this pure breed Pomeranian. It was just like sweet as anything, and I'm like, who would dump this pure breed, gorgeous little, and he's in the worst shelter in Washington D.C. Like, just you can imagine. I mean, the people did the best they could, but it wasn't great. And it's just it always blows my mind because they're so innocent and good and kind, and you just don't know. So anyhow,
It happens all the time.
I
I have
trust.
a client who lost his wife and his only companion. Didn't have any local family. His only companion was his dog, who happened to be a pit bull. And we know how many pit bulls get, dumped
Yeah.
at the shelter. I got a text message from the attorney on a Saturday saying, "Hey, Mr. So and so passed away last night." And my first instant was like, "Where's Peaches? Like, where's Peaches?" I spent all Sunday tracking that dog down. They went to the hospital with a catch pole and drug that dog out and went to the animal control. I spent 10 days on a big social media campaign. I got that dog adopted. Like,
Awesome.
we're breaking that dog out because, that dog's on one of maybe like 50 pit bulls down there. But you fail to plan or you don't make your wishes known, and that's where, that's what happens.
Laura, have you found that this business, because I hear it from, like, I just heard it. You've been doing it now for some time. So these people become your friends, your clients, your, right, like the confidant, like everything. I mean, because money is so personal, so
Very
personal,
much
so
true.
emotional, right?
Very much
Yeah.
true. One of the other things that I do talk about in my book, a little preview, that I have found most people don't talk about this. And when most people's experience with a financial advisor, oh, they just talk about things to buy. Buy this stock, buy this, whatever. They don't get into all of this money philosophy and planning
Yeah.
and numbers and so on and so forth. They don't get into pet trusts. But digital assets. So when you're doing your estate planning, digital assets. And when I say that, many people think about the online accounts that they have, like, their bank accounts online or crypto accounts, things like that. But digital assets are more than that. And your attorney can draft into your documents who's in charge of digital assets. If you have, and I haven't looked at the terms of service recently, but there are some email providers that if you pass away and they learn that you've passed away, they shut it down. It's gone. So if your dad, your brother, whoever had certain things stored in their email, it's gone. Think about all the things we have digitally these days. Our photos, Facebook accounts, social media. You can put a legacy person on Facebook that they control your page if you pass. Most financial people don't talk about it, but it's a bigger picture. Like, there's digital assets. So who's in charge of that? And who can get in and who can get access? Weird things can happen.
Yeah. Okay. What else? Right. Because that is like, as I'm going through this, like that's so important, right? Because especially
Your
if you do,
photos, your social
yeah,
media, investment accounts, and I'm making this up, but it is a
your crypto
fictitious example, but
wallets,
it's true.
right?
So Johnny gets control of dad who passed and gets into dad's email account and finds all dad's emails to a woman who's not mom and mom, like, who's in charge of these types of things? And obviously I'm being silly with that example, but who's in charge of this? Who's getting into those online bank accounts? Who's getting into your photos? Is it the one person in the family that's going to steal all the photos and not share because they're
Yeah.
in grief? Like, who's in?
Yeah.
There's so many things we do digitally. You can't forget that, and you have to designate that in your planning documents, and your attorney can control that and can write that for you. People don't talk about that.
Yeah. You've given me a lot to think about. I think anybody listening right now, who's paying attention, right? It should give you a lot to think about, especially business owners, right? We have, especially brand, when you start thinking about brand and content and like who actually owns that brand upon your passing and manages that page, right? You think of some of the motivational speakers, like a Jim Rohn, like the family like had to take over that, and so you don't, you may not be thinking about that, but you have to, you should be, right? I know
Absolutely.
I am after this conversation
If
for
if
sure.
you own a business and something happens to you and you're incapacitated, or God forbid you pass away, who is in control? And is your family going to be provided for? Do you have a key man policy? Do you have a key man, agreement? What will happen? Same thing with incapacitation.
Well, with that, Laura, if somebody wanted to get a hold of your book to get to know you a little bit more, what's the best way for them to
The
reach you?
best way, one of two ways, they can just shoot me an email at impavidwealthadvisors@ampf.com, and I'm sure you will put that in your comments,
We'll put it all in the comments.
and name and address, and we'll shoot it out. Or you can just give us a call. Our phone number is 813-319-0011, and I'll drop a copy of the mail. I'm not selling the book. It's just my, karma, give back to the universe.
I love it. I love it. Well, thank you so much. I've enjoyed this conversation. We explored a lot of things, right?
We did.
Explored a lot of things. And Laura, thank you so much for being part of the Income Flip podcast.
You are quite welcome. Happy to be here.